Hello everyone, and welcome back to Report of Silver, the channel where we break down the biggest developments in the gold and silver markets and explain what they really mean for investors, stackers, and anyone watching the global financial system. Today's move in silver is exactly what many of us expected. Silver is surging higher after news broke that we may be getting closer to a major geopolitical breakthrough involving the Strait of Hormuz. This is one of the most important shipping routes in the entire world, and when headlines like this emerge, markets react immediately. That is exactly what happened today. Silver moved sharply upward, nearly touching the $80 level again, and investors everywhere are asking the same question. Is this just the beginning, or is this a short-term reaction that could reverse later? That is what we are going to break down today. Before we get into the numbers, it is important to understand why this matters.
The Strait of Hormuz is one of the most critical energy choke points on Earth. A huge percentage of the world's oil supply moves through this narrow waterway. Any disruption there immediately creates fear in the energy markets, pushes oil prices higher, and increases inflation expectations around the world. But now, after weeks of tension, markets are reacting to the possibility that a diplomatic deal could reopen the strait fully and reduce those risks. That single possibility has created what I would call cautious optimism across global markets. The key word here is cautious. Markets are not fully convinced yet, but they are beginning to price in the possibility of de-escalation. That cautious optimism showed up very clearly in today's precious metals market. Gold surged more than $60, climbing well above the $4,500 level and closing near $4,571 per ounce. That is a major move in a single trading session. But silver, once again, outperformed gold. Silver gained more than 3%, adding about $2.55 and pushing up toward $78.20 per ounce. At one point overnight, it nearly touched $79. That is an extremely powerful move and confirms that silver remains the most explosive major metal in this market. Now, what makes this even more interesting is what happened in the broader commodity complex. Platinum and palladium also moved sharply higher. Palladium jumped more than 3.5%, while platinum climbed more than 2%. That tells us something very important. Silver today was not just acting like a precious metal, it was behaving like an industrial commodity. That distinction matters because when silver trades like a commodity, it often becomes much more volatile and much more powerful on the upside. Investors are not simply buying it for safety. They are buying it because they expect industrial demand, economic recovery, and inflation-related demand to all support higher prices. At the same time, crude oil moved in the exact opposite direction. Oil dropped sharply, falling more than 6% during the session. That is a huge one-day move. Crude fell more than $6 per barrel and moved toward the $90 area. This is exactly what markets should do if traders believe tensions in the Middle East may ease. Less risk in the Strait of Hormuz means less fear of supply disruption. Less fear means lower oil prices. Lower oil prices then reduce inflation pressure, which changes how investors think about interest rates, the US dollar, and ultimately precious metals. And that brings us to another important piece of today's move. The US dollar weakened. The dollar index dropped below 99. A weaker dollar almost always supports gold and silver because it makes those metals cheaper for buyers around the world. That creates additional demand pressure. So today, silver had multiple tailwinds at once. It had geopolitical optimism, falling oil, a weaker dollar, and improving risk sentiment. When several bullish drivers align at the same time, silver tends to react very aggressively, and that is exactly what we saw. But this is where investors need to stay disciplined. The market is moving on expectations, not confirmed reality. We do not yet have a finalized deal. We do not yet know if the Strait of Hormuz will fully reopen. Markets are pricing in hope, and hope can reverse very quickly if negotiations fail. That is why I call this cautious optimism rather than celebration. Silver is telling us that traders believe progress is possible, but they are not fully convinced. That makes the next few days extremely important, because if confirmation arrives, silver could push decisively above $80. If negotiations collapse, we could see a sharp reversal just as quickly. That is the setup heading into the rest of this week. To understand what silver may do next, we need to look deeper into why today's rally happened and whether the move can continue. Many investors make the mistake of looking only at price and ignoring the underlying drivers. In silver, that is dangerous because silver is unique. It is not just a precious metal like gold, and it is not just an industrial metal like copper. It lives in both worlds at the same time. That means it reacts to multiple forces, and sometimes those forces move in opposite directions. That is exactly what makes silver so fascinating, and also why it can move much faster than most other assets. Today, one of the strongest drivers was the sudden drop in crude oil prices. When oil falls sharply, many investors assume that gold and silver should also fall because lower oil can reduce inflation fears. Under normal conditions, that logic makes sense. Historically, when inflation expectations cool, precious metals often lose momentum. But silver is behaving differently right now because the market is not viewing today's oil drop as purely deflationary. Instead, the market is viewing it as a sign of geopolitical relief. That changes everything. If the Strait of Hormuz opens and global energy flows normalize, it means supply chains improve. It means shipping becomes easier. It means manufacturers can plan with more confidence. It means global economic activity may strengthen. That is bullish for industrial metals, and silver is one of the most important industrial metals in the world. It is used in solar panels, electric vehicles, medical equipment, defense systems, electronics, and advanced technology. So while gold may benefit mainly from safe haven buying, silver can benefit from both safety demand and growth demand. That is why silver outperformed gold today. Another major factor supporting silver was the weakness in the US dollar. The dollar index moved lower again, dropping under the 99 level. That may not sound dramatic, but in global markets it matters a lot. Precious metals are priced in dollars. When the dollar weakens, buyers using other currencies can buy more ounces for the same amount of money. That increases international demand. Large institutional investors know this, and they react quickly. A falling dollar often acts like fuel for metals, especially silver, because of its higher volatility. There is also another hidden factor at work: Treasury yields. Today, U.S. bond markets were mostly closed because of the Memorial Day holiday, so there was not much activity in bonds. But expectations for lower yields are beginning to build again. If oil prices continue falling and inflation expectations soften, some traders will begin asking whether the Federal Reserve may eventually consider easing policy. That is a powerful thought for metals markets. Even the possibility of future rate cuts can create strong buying pressure in gold and silver. Silver especially responds strongly because lower rates weaken the opportunity cost of holding metals. Now let us talk about market psychology, because this is where things get very interesting. Traders love certainty, but right now there is no certainty. We only have a possible deal. That creates a very emotional market environment. Some investors are buying because they believe a breakthrough is coming. Others are buying because they fear missing the next leg higher. This is called momentum buying, and silver attracts it more than almost any other metal. Once silver starts moving, it often pulls in additional buyers simply because the price is moving. That creates what we call a self-reinforcing rally. But momentum can cut both ways. If negotiations stall or headlines turn negative, those same momentum traders can become sellers just as quickly. That is why silver remains one of the most volatile markets in the world. It can rise $3 in a day, but it can also lose $3 in a day. Investors must understand that volatility is normal here. It is not a bug in the silver market. It is part of the market itself. One more number that deserves attention today is the gold to silver ratio, which moved down to around 58. That is significant. A falling gold to silver ratio tells us silver is outperforming gold. Historically, when that happens during a bull market, it often signals confidence. Investors move from the safer metal, gold, into the more aggressive metal, silver. That rotation usually happens when investors believe the bull market still has room to run. That is what makes today's move important. This was not defensive buying. This looked more like conviction buying. And if that conviction grows, the $80 level may only be the next step, not the final destination. Now, the big question investors are asking is this: what happens if the Strait of Hormuz actually reopens? This is where the analysis becomes much more interesting, because the first reaction and the long-term reaction may not be the same. In markets, the first move is often emotional. The second move is usually based on fundamentals. Right now, silver is reacting emotionally to optimism. Traders are buying because they believe a deal may happen. But once that deal becomes official, markets will begin asking a different question. What does this mean for inflation, interest rates, and long-term industrial demand? If the strait fully reopens and oil supply begins flowing normally again, the immediate result should be lower energy prices. That means crude oil likely continues falling. We have already seen it move sharply lower, dropping toward the $90 level. If this trend continues, energy inflation could ease meaningfully over the next several weeks. That would normally be considered bearish for precious metals because lower inflation reduces one of gold and silver's strongest traditional support drivers. In simple terms, if people become less worried about rising prices, they often feel less urgency to buy metals as protection. Under that normal scenario, silver should pull back. That would be the textbook expectation. Lower oil, lower inflation pressure, and reduced geopolitical risk should create downward pressure on silver. But this cycle is not normal. Silver is not trading purely on fear right now. It is trading on a combination of fear, industrial demand, and monetary uncertainty. That is why I believe silver's reaction after a reopening could be very different from what many people expect. Think about what a reopened Strait of Hormuz really means. It means supply chains begin healing. It means shipping lanes become more reliable. It means industrial production around the world could improve. That is very bullish for silver because silver is deeply tied to industrial activity. Every increase in manufacturing, technology production, and energy infrastructure supports long-term silver demand. So while lower oil might create short-term selling pressure, stronger industrial expectations could quickly offset that weakness. There is another layer here that many people are missing: central bank policy. If oil prices fall and inflation slows, some investors may begin expecting the Federal Reserve to lower interest rates sooner than expected. That is extremely important. Lower interest rates usually weaken the dollar and make precious metals more attractive. In other words, even if silver initially drops after the strait reopens, expectations of future monetary easing could quickly reverse that decline and push prices higher again. This is why I have been saying for months that silver is living in a different environment than in past cycles. Normally, one or two factors drive the market. Today, silver has multiple engines running at once. It has industrial demand, it has monetary demand, it has geopolitical demand, it has inflation demand, and it has physical supply concerns. That is a very unusual setup, and it helps explain why silver has been outperforming gold for much of this move. We also cannot ignore the physical market. Even if macroeconomic conditions improve, the physical silver market remains tight. Industrial users still need metal. Investors are still stacking physical ounces. Vault inventories remain a major story. And supply deficits have not disappeared just because oil dropped $6 in one day. This is where many short-term traders make mistakes. They focus on headlines and forget the structural supply picture. Silver's long-term fundamentals have not changed. If anything, they remain very supportive. That means if we do see a pullback after a straight reopening, many investors may view it as a buying opportunity rather than a warning sign. That changes market behavior. Instead of panic selling, you may get dip buying. Instead of weakness, you may get support at higher levels than before. That is how bull markets mature. Corrections become shorter and buyers become more aggressive. So yes, I believe there could be an inversion. Historically, oil and silver often rise together, but in this unusual cycle, oil could fall while silver stays elevated or even continues climbing. That sounds unusual, but that is exactly what markets do when multiple forces collide. This is why silver remains one of the most important markets to watch right now. What happens next may redefine how investors think about this metal for the rest of the year. As we move deeper into this week, investors need to understand that the next phase for silver will likely be decided by confirmation, not speculation. Up to this point, markets have been trading on headlines and expectations. Traders heard that negotiations involving the Strait of Hormuz may be progressing, and they reacted immediately. That is normal market behavior. But eventually, the market demands proof. It wants to see whether this potential agreement becomes reality, or whether this is just another temporary headline that fades away. That is why the next several trading sessions could be some of the most important we have seen in weeks. The first market to watch is oil. Oil remains the clearest signal of what global traders believe about the situation. If crude continues falling toward the mid-80s, that would tell us confidence is growing that supply disruptions are easing and that the Strait of Hormuz may fully reopen. That would likely continue putting pressure on inflation expectations. However, if oil suddenly reverses and starts moving back toward $100, that would suggest the market is losing confidence in the diplomatic process. Silver will react to that immediately. So even though this is a silver story, the oil market may give us the first clue about what happens next. The second market to watch is the US dollar. Today, the dollar index moved below 99, and that helped support gold and silver. But if the dollar continues weakening, that becomes another major tailwind for metals. A weaker dollar attracts global buyers into precious metals because it improves affordability outside the United States. On the other hand, if the dollar suddenly strengthens because investors move back into safety, that could create temporary pressure on silver prices. This is why professional analysts never look at silver in isolation. Silver reacts to what is happening in oil, currencies, bonds, and equities all at the same time. Speaking of bonds, Treasury yields will matter greatly once the holiday closure ends and normal trading resumes. Bond markets are one of the clearest indicators of what investors expect from the Federal Reserve. If yields begin drifting lower, that would suggest traders believe lower inflation may eventually lead to easier monetary policy. That would be bullish for silver. But if yields rise again because markets fear inflation remains sticky, that could create some short-term resistance. Either way, the bond market will help define the next move. Now let us talk about something that often gets overlooked during these geopolitical stories: investor psychology. Right now, there is excitement in the market. People see silver moving quickly, and they begin fearing that they are missing the opportunity. That is what creates retail momentum. New buyers rush in because they see the price rising. Social media begins talking about silver again. Headlines become more dramatic. Suddenly, everyone starts asking if silver is going to $100. That emotional energy can push prices much higher in the short term than fundamentals alone would justify. But emotional rallies can also become unstable. If buyers begin chasing price without understanding why the market is moving, those same buyers can panic at the first sign of weakness. That is why experienced investors stay disciplined. They do not chase every candle higher. They watch the trend, the volume, and the broader macro picture. Silver rewards patience more than emotion. Another factor supporting silver right now is the continued strength in industrial metals overall. Platinum and palladium also rallied strongly today. That tells us the market is not simply buying precious metals for safety. It is buying hard assets broadly. That is an important signal because it suggests traders still believe in a strong industrial demand story. Silver benefits directly from that because it sits at the center of both the industrial and monetary worlds. So the setup heading into the rest of the week is very clear. If we get confirmation that the Strait of Hormuz is reopening and oil continues falling, silver may briefly pause or consolidate, but the broader trend could remain bullish because of industrial demand and potential monetary easing expectations. If negotiations fail, silver could spike even faster as safe haven demand returns. In both scenarios, silver remains at the center of the story. That is why this metal deserves your attention right now, more than almost any other market. The next few days may tell us whether today's move was just a rally or the beginning of the next major breakout. As we close out today's analysis, the biggest takeaway is very simple. Silver is telling us something important. Markets always communicate before headlines fully catch up, and right now silver is sending a very strong message. The message is that investors believe the global risk environment may be changing, but they are not yet ready to abandon precious metals. That is why silver is so fascinating in this moment. It is benefiting from optimism, not fear. That is not how gold and silver usually behave during geopolitical events, and that is exactly why this move deserves attention. Normally, when geopolitical tensions begin to ease, safe haven demand starts to fade. Gold may lose some momentum, and silver often follows. But today, silver did not follow that traditional script. Instead, it surged. That tells us traders are looking beyond the immediate headline. They are not simply pricing in a possible reopening of the Strait of Hormuz. They are also pricing in what that reopening could mean for the broader global economy. If oil supply normalizes, shipping stabilizes, and inflation pressures ease, that creates a more predictable business environment. Businesses invest more confidently, manufacturing expands, industrial production improves. All of that supports silver demand. At the same time, there is still a monetary story here. Governments around the world continue spending aggressively. Central banks remain under pressure. Debt levels continue climbing. Even if inflation cools temporarily, the long-term concerns about currency debasement and purchasing power have not disappeared. That is why so many investors continue holding physical silver. They understand that silver is not just a short-term trade. It is also a form of financial protection. It is insurance against policy mistakes, currency weakness, and long-term inflation risk. This is why I continue to believe silver remains one of the most compelling assets in the market today. It has the rare ability to benefit from multiple environments. If inflation rises, silver can benefit. If industrial growth strengthens, silver can benefit. If the Federal Reserve cuts rates, silver can benefit. If geopolitical uncertainty returns, silver can benefit again. Very few assets have that kind of flexibility. That does not mean silver moves in a straight line. It absolutely does not. It is volatile, emotional, and often frustrating in the short term. But over the long term, these kinds of structural advantages matter. Now let us talk about the $80 level because psychologically, that is the next major battleground. Markets love round numbers. Investors watch them closely. Media headlines focus on them. If silver breaks above $80 and holds that level, that would be a major technical and psychological victory for the bulls. It would attract more attention. It would likely pull in additional institutional money. It would create even more momentum. But if silver fails near 80 and gets rejected, we may see temporary profit taking. That would not necessarily be bearish. It could simply be a normal pause before another move higher. So, what should investors watch next? First, watch oil. It remains the clearest indicator of confidence around the Strait of Hormuz situation. Second, watch the US dollar. Continued dollar weakness supports metals. Third, watch Treasury yields because they will tell us what markets expect from the Federal Reserve. And finally, watch silver itself. Watch how it behaves around key levels. Strong markets hold gains. Weak markets give them back quickly. Silver's reaction over the next few sessions will reveal a lot. What we are witnessing right now is history unfolding in real time. Whether this becomes a lasting geopolitical breakthrough or just another temporary headline, the silver market is giving us a front row seat to how global macroeconomic forces interact. That is why this metal remains so important and why so many investors around the world continue watching it every single day. Thank you for joining me here on Report of Silver. This is what we do on this channel. We bring you the latest news, the deeper analysis, and the real story behind the gold and silver markets. I want to hear from you now. Do you believe silver breaks above $80 this week, or do you think we see a pullback first? Put your thoughts in the comments below. If you found this report informative, insightful, and educational, please take a moment to support the channel by liking, sharing, commenting, and subscribing. Until next time, keep watching the markets, keep stacking wisely, and stay prepared.